Vikramadithya Gourineni, who is the ED at Amara Rajas Mobility, is here, and we want to get in an insight as well into all of the latest news, as well as what we've been seeing with respect to the brokerage notes coming in. Do remember there was that pact that they signed with Gotion-InoBat. So let's hear it out then, as management spoke with ET now as to what the contours of the deal are.
We are in discussion with Vikramadithya Gourineni, the MD of Amara Rajas Batteries. And there's a lot of stuff happening at Amara Rajas. In fact, the entire battery ecosystem of India is undergoing a transformation. Amara Rajas, for the last few years, had been working in this direction, and now we are looking at much more concrete steps being taken by the top management. Vikram, thank you very much for joining us on ET Now. I remember interacting with you and your brother when you had taken over this role. And now, over the years, I'm seeing that much more concrete steps, much more evidence of the vision you had laid for us then are being seen in steps, and this new tie-up perhaps is also in the same direction. But I'll come to that in a moment, but I just want to understand with you. I remember you telling us then that the idea is now the top management wants to transform the company into a mobility solutions company from just being a battery company in the past. How is the movement towards that overall, the progress since then till now?
I think the progress has been, it's been measured. There have been small steps taken, but largely in line with what we expected. To start with, we identified synergies within our own group. We had a pretty strong background in power electronics. We had a strong background in large system integration. So we in another one of our group companies, Amara Rajas Power Systems, we got rid of the businesses that didn't really gel with what we talked about, energy and mobility, and we restructured that business, and actually we acquired it into the listed entity. So now today we're not just going with simple batteries to our customers, we're going with batteries and chargers, and we're adding an entire power solutions stack on top of that. So I think it still takes a bit of time because we are building new capabilities. But the teams are in place right now. The customers, we have projects with them, and some of the first wins we had are on the charging side, and we're entering into mass production very soon with a completely localized portable charger that can cater to all electric two-wheelers and three-wheelers, and slowly we're expanding our portfolio. And I think on the battery side, it takes some time, but it's a little bit different than a lead-acid battery. It's not just a plug-and-play solution with what we make straight off the factory line. There's a lot of customization that goes into it. There's a lot of coordination with the OEM. So the Pact business is a bit more complex, and we're expanding our capabilities in that quickly as well.
Vikram, let's talk about the Gotion High-Tech, the tie-up which you have done. Also tell us a little bit about the background of this company, and what does this tie-up actually bring to the table for company and shareholders?
Sure. So Gotion High-Tech is actually, if you look in China, they're one of the top 4 or 5 players, and in the globe they crack the top 10. But specifically, what we're tying up with them for is their LFP chemistry, which they have a very strong track record, excellent customer portfolio, well accepted in India also, with some major OEMs already using their product. And Gotion is one of those companies that very early on took a bet to not only globalize more quickly than their peers in China, but also to really make backwards investments across the entire battery value chain. So everything from mining to the cell making, pack solutions downstream, they own every part of their supply chain. So that's what we're really excited about. And secondly, because they're globalizing, Gotion is replicating the supply chain all over the world as well. So it was a good fit for us. Of course, we invested in a company called InoBat a couple of years back, and doubled down on our investment very, very recently in the last 1 week. So we're tying up with a subsidiary of Gotion that's a JV with InoBat in Europe, and hopefully plugging into a much broader ecosystem beyond the cell making that we're currently talking to them about.
So would it be right to assume that even Amara Rajas actually is looking at a model which is a full-scale solution, right from raw material to putting it together to distribution and even application in the charging ecosystem side? Is that the direction we would like to take? Earlier model was just battery manufacturing.
I think you've hit it on the head. That's kind of the direction we're going. Probably it takes a little bit more planning and time for us to really get deeply invested into the raw material. But to start with, this partnership enables us to plug into a well-established global ecosystem. I think it gives us a lot of supply security, but also it definitely helps us on supply costing. So we're talking about deeper partnering with our partner in the global supply chain. But to begin with, it would be for cell assembly, some know-how on packs, energy storage solutions. But definitely, where all parties involved are open to deepening this relationship further.
Excellent. Let's talk about the financial part of the business. Of course, the current company is throwing a lot of cash from the legacy business. What are the requirement for this plan which you're talking about? The fully integrated plan. What are the capital requirement? How are you going to fulfill it? If you could share, and what is the overall capex over this the planned project life for the next, say, 3 to 5 year period?
So what we announced when we announced our investment in Telangana was that an overall outlay of 16 gigawatt hour would be around the ballpark of 9,500 crores. I think we have to recast this slightly because with a partner on board, we see that there's immense advantages on the capex side, on the purchasing costs, the equipment, everything. I think there's a lot of advantages they bring to the table. And in addition to that, we also need to see, depending on the portfolio of products we want to release into the market, our partner can suggest that there's far more efficient ways to double the capex utilization. There may be cells that have a lot of synergy that can use many of common equipment. So I think we're recasting those numbers to see exactly where we end up. There is a possibility of an upside that we add more capacity sooner if we get more orders, especially with a very proven product in RKD now. But what we said earlier was that phase one, which includes the R&D facility here in Hyderabad, the pilot plant and the first giga line of 2 gigawatt hour, that's still well in line, and there's Pact facility part of that also. In fact, all that phase one investment, we're still, we are still maintaining that it's going to be funded largely in-house. And for future requirements, as we sit with our partner and recast, our funding requirements, I think we're going to look at many options. Of course, we're a completely unleveraged company, but some mix of debt and equity with the appropriate funding model, we'll be able to share with you more in the next couple of months.
Can you share a ballpark of how much what is the gross block which will be invested into, say, over the next 5 year period, and what is the kind of revenue it is capable of generating over that period when fully invested and full utilization is achieved?
So if I'm not mistaken, I think we said that the full, once fully invested, that we're going to be around $2 to $2.5 billion. But I think there's a couple of assumptions that we just need to double check and see. Mostly still within this 5 year period, 9,500 crores. But like I said earlier, I think we're going to just take a quick relook at this, a fresh look along with the partner to see what makes sense and where we can actually optimize on this capex. Okay,
great. Also, I want to understand how exactly is the plan progressing on your the recycling of the new batteries which will be manufactured, the lithium-ion ones. Would you be going for your own recycling plant, or would you be partnering or outsourcing it to some experts of recyclers? What's the progress and plan like there?
So at the moment, maybe I can share. On the lead acid side, actually, we're building a state-of-the-art recycling facility in the state of Tamil Nadu. That's progressing, and that should be up and operational at the end of this financial year. And on the lithium side, I think we want to do that more quickly. Lead, we didn't really need to touch that for a large part of our history. But today, because we hardly do pilot volumes in the very early stages, we may actually continue to work with some recycling partners that are there in India today. But what we have observed, a lot of large players is especially working with LFP chemistry, where the material recovery is not so valuable. It's better to just have a closed loop system where you're able to recycle your own process scrap, your own spent batteries, and also possibly even import scrap from others as well within the country or outside. So that's something I don't have immediate plans on, but it's something that definitely, along with the partner, we want to sit and have a captive recycling over a period of time.
Okay, great. Vikram, I want to understand, what are the margin levers which exist within the company? I'm assuming that since you're going for a completely integrated kind of a model of business going forward in new mobility solution, and of course, you would have a recycling unit, be it the legacy batteries or the new batteries, both. You would have a margin edge versus peers. What is the ideal kind of margin range we are talking about when all these plans come into place?
I think it's a slightly early. We still have to test those figures. And I think what we have observed definitely is that around the world, it's not that the cell business are wildly profitable. It takes some time to mature and get to a certain scale. We need to see how well our scale efficiency is able to lend to making better margins more quickly. But what I can say is being able to plug into a global supply chain of our partner is going to help us a lot, because otherwise we don't, we're setting up something around 16 to 20 gigawatt hour in a world where the capacity is, announced capacity at least is in excess of 2 terawatt hours. So we're very small, but being able to be part of a larger, raw material ecosystem where we get preferential pricing on par with our partner is going to be very helpful for us.
Right. Can you tell us how's your Gigafactory shaping up right now in Telangana?
So the Pact facility, I'm happy to share, in less than a year, we've been able to get the facility pretty much underway. Today, we have local employees that got trained up between our existing facility in Tirupati, and now they're running the lines. The first line is installed, and we're doing some debugging and quick, production runs, trial runs. But that should be, up and running in full in the next month or so. On the pilot line, the R&D facility construction is underway, and I believe that at least the first phase of each will be ready to go maybe this time next year. On the first factory, which we talked about, which is to cater specifically to light electric mobility, the two-wheeler segment, we have commenced the plans, and the construction should start shortly.
Let's talk about your domestic auto business is growing at about 16%, international volumes 30%. First of all, just share some outlook. Where do you see these numbers sustain going forward? And as and when EV batteries also become large, would you also be looking at an export opportunity, or for the initial few years, largely the domestic opportunity, because there's still big demand out there will be looked at?
I would, refrain from commenting too deeply about our existing numbers, because of course, there's another team that runs that, the automotive industrial business as it is today. But we are growing our exports at a very healthy rate, and we are exploring if there's any good targets out there or any opportunities for greenfield investment into international markets as well. Because I think while I work on this new energy space, contrary to what a lot of people are saying, the traditional powertrains are not going to phase out very quickly. There's still, especially in the part of the world we are, the developing world, there's a lot of growth left. There's a lot of penetration that it's an underpenetrated market. And we believe that there's plenty of opportunity, especially where we've already hit critical mass of exports from India, to possibly even put local facilities with varying levels of value addition. On the new energy side, on the lithium side, we do have some broad export rights. It's something that we were able to secure for ourselves with reasonable restrictions. I think when your partner is investing all over the world, they'll also want some reasonable restrictions, but it's not going to affect our strategy in any manner. Also, kind of going back to the earlier point, the capacity we're setting up is relatively small compared to what people are setting up around the world. So we do believe that opportunistically we can sell our lithium solutions in the existing markets, especially our stationary customers who are looking for multiple options in addition to lead acid, like telecom, UPS, but also in light electric mobility, which is more prevalent in India, Southeast Asia, these nearer markets. I think we'll have a good opportunity to sell some products there as well.
Sure, I understand and I appreciate it. Let's focus back on new energy. I want to understand the landscape, much more larger point. How much capacity addition is happening right now in our country in new energy space, lithium ion, players such as you and a few others, versus how much the incremental demand is likely to come up? What I want to understand that will there be a demand supply mismatch for initial years, which will be made up for by imports, or what are the scenario you envision in the next 3 to 5 years things will take shape as capacities come on stream?
I think we can talk about announced capacities, because at least that's a relatively known figure. I believe the latest I saw, the announced capacities are around 80 to 100 gigawatt hour capacity coming up in India. And that definitely will fall short of the required market demand. This is by 2030 I'm talking about. So I do believe that imports will have to supplement the lack of capacity in India for a period of time, because by 2030 we're talking about anywhere from 100, 150 gigawatt hour in a very optimistic scenario required in India. So I definitely believe that imports will continue for some period of time, but I think players like Amara Raja are very well placed in that time, because we have a tie-up with large global manufacturers. So the cells that we see are required on higher priority, we can localize in our first phase, and we can continue taking the partner support to cater to all other applications where we're not finding as quick in our own roadmap.
Okay, so that's latest from the management of Amara Raja. Very high interest stock right now because it's seen a massive rally. It's more than doubled this year already. And if you hear the commentary from the management, they're not done yet. Perhaps a lot more is on the cards. The stock is taking a bit of a breather today, but that's after the massive run-up that we have seen this year already. But talking about the other important...
If you like this video, then like, share and subscribe to ET Now.